last week we talked about there's a rejection right at the access level, access zone 7500. So tested a few times, and the direction is likely to going down and to test a swing low at 7400. So there's a 7400 and also plus the swing low, and then we have next support level at about 7300 and also the swing low as well. So this is happening, that just materialize, unfolding, and that really is just a spring. So this is a spring, a temporary commitment just below the previous swing low level, and followed by a next day recovery. So next day just have a reversal bar, totally reverse the previous bearish candle. So this is just like a textbook style spring, and then we have a test bar. So Friday test bar was a key. So this was the very important test bar, because not only is just a test of this previous reversal bar, but if we look at the hourly time frame, so daily time frame show as the demand tail, and hourly time frame will give us a clearer picture. So if this spring is going to fail, means that is likely going to fail at the 7500. So this is really the access line. The previous support level, once broken, will become the resistance. So that's resistance, resistance, and here is the point. Okay, so that's on Friday. So Friday's movement actually tested the 7500s, and during the Globex period, the European London session, have some profit taking, so some resistance show up right at this 7500 level and got supply increases, and here we go. So there's a US market open, so attempt to go up and got some supply, and then go back down, break below 7500 and come to this point. That's where we have really just very vibrant rally up. So that forms a demand tail, and not only one but two demand tail in a row. So that really shows the intent of the bull. Okay, so buyers really show up right here and followed by the next bar. So both demand tails shows that there's buyers come in to support the market, to support the level, and then push the price up. So this bar is a test bar of the previous reversal bar. So if we think this is a spring, so Thursday was a spring, so we got a temporary commitment. Wednesday, Thursday is a spring, go back in. Friday is a test bar, so look at the demand tail, tested the previous reversal bar and shows commitment to go up, okay, and close near the high of the day. So that really just flipped the direction bias to the upside. So not only we have the intraday analysis earlier on that's showing positive, constructive movement, but also that is the first bar that actually breaks above the downtrend line. So once it's broke above the downtrend line, this directional bias is flipping to the upside. And in our email we sent out on Monday and talk about the immediate targets would be the previous swing high level 7600 all the way to maybe 7640. So in fact it just hit in a day. So yesterday just hit the immediate targets, and right now is still attempt to go up. So we have no idea what's going to happen today, tomorrow, but so far the swing is still up, and it is very important to look at how the bar actually react right at the resistance level, because if we look at the detail, previously we have set this swing high, and this is the first time it go back to test a swing high, Here comes a reaction, and here's the second time or third time tested the swing high, and demand is deteriorating at this point and then become a downswing. So right now we got demand showing up strongly, and it is very important to see whether we'll have excessive supply shown up right at the top. So it makes sense and is completely normal for the profit taking activity to happen right there and to have a bit of the pullback or consolidation. So a pullback like this above the 7500, build up the right handle, will be totally normal, and in fact is very constructive. So this is one of the pullback scenario to build up the right handle. And of course, if the market is really bullish, it could still push it to the upside until it hit with some supply and profit taking activity. So right now, there is no signs that the market is going to reverse just because it hit a resistance level, that hit the previous swing high level right at the top. So direction is still up, and if it's just happened to have a pullback profit taking, as long as it's above the 7500 level, this is very constructive. So it means that it's likely going to build up the right handle. Okay. However, for the slightly bearish or more volatile scenario will be another choppy movement coming back down, big bearish bar, consistent supply level, then means that it's going to be a prolonged trading range. So this is how I interpret the S&P 500 at the moment, because right now, even if you look at the breadth, whether it's the long term, we got about 56% of the stocks above the 200-day moving average, means that there are still plenty of the stocks that are above the long term MA, and even with the short term breadth, it's still not too bad above the 50%, although not that strong momentum showing up, but this is still a constructive bullish environment. Just that we got quite a lot of the AI infrastructure stocks that get beaten down due to heavy profit taking. So those stocks will definitely take some time to recover. So only a handful, like maybe less than 5 of them, is still showing resiliency. So Jim say, I thought it was definitely going to 7,000. Came back really strong. At what point would you feel S&P is heading for 8,000? Ah, okay. Well, mm, yeah. So 7,000 is another level. So if it's going to break 7,300, like break down for this level, so this is just like what we discussed last week. So for the relatively bearish scenario, a breakdown, inability to rally, increasing of the supply, and it's likely going to come down to 7,000. But so far, if you just trade this, okay, so let's just compare the reaction. So first reaction, increasing of the supply, and this is the sharpest down move that we have out from the April bottom. So very strong trend up with a change of character, downswing, change of character wave coming down, increasing of supply. So that defines the trading range. And subsequent reaction, so that's the second reaction. So we got first change of character, second, that really becomes a relatively bullish reaction. So not only is the reaction is the progress to the downside is shorter, but is less impulsive than reaction one with decreasing of the supply, and we got a contraction of the volatility, and here the market seems like want to break out and decreasing of the volume, so both the demand and supply decreases, but suddenly got some failure bar showed up and eventually break down. So that really become slightly bearish but ultimately this is still a trading range. So at this point, this swing is up, so we got a downswing, and even if we compare 2 and 3, so this is 1, this is 2, this is 3. So downswing, direction, the third direction is only like taking maybe more than 2 weeks, so close to 3 weeks to reach the swing low. So here is roughly around 2 weeks to reach this point. So it actually spends more time in the third direction to reach the swing low level. So in terms of the impulsive level, degree is not that strong compared to reaction. So reaction 3 is slightly better than reaction 2. So in terms of spending more time before hitting the swing low level. So now compared to this move up, okay, so this one is, let's see, let me use another color. So this is up wave, third up wave, first up wave, second up wave. So compare these 3 up wave. The first one is definitely very impulsive, very strong, very high volume, consistent demand, high demand. Up wave 2, second up wave, demand decreases, but still not too bad because it also shows that there is no excessive supply show up right at the top. So just when we have a failure somewhere around here, then the crack shows up. The third up wave, which is the current up wave, looks similar to the first one. So the third one looks similar to here. So in terms of the impulsiveness, the degree of the impulsive, they are both very aggressive. And in terms of the volume, this is still better than the middle part here. So volume increased slightly, but less than the first up wave. So I would say that this is potentially a sign of strength rally. Okay, this is potentially a sign of strength rally right after a spring of the previous swing low. So if it could further confirm by a holding up above 7,500 for maybe a week or two, then I think it could potentially go back up to test higher level, higher ground. Even 8,000 is not that far. So this is close to 76, 7,700. So overall, whether you look at the plainly just the index or looking at other stocks. So right now, I don't really see a lot of the group. I just run up together, but finance group is still strong. Healthcare is still strong. Just that the technology part is probably the one need to spend some work. So my tech is, as long as is still above 7,500, it's likely going to break out and to go up to 70, 77, 7,800, and eventually it could hit 8,000 quite soon.